Hey folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond over at the Contrarian Trader. And what we're going to go over tonight are the weekly charts. We're going to spend some time reviewing a lot of charts, weekly setups. How are we poised to close out the week? What do we think is looking attractive? What do we not think is looking attractive? We will also talk about the Federal Reserve's balance sheet. How has it grown this past week? And of course, we will talk about the seasonality of certain charts that are out there that are looking pretty good. So before we get to it, I need to bring up my YouTube channel has about 2,000, not even 2,000 subscribers. This kid here, and I'm not knocking him. I think he does a great job. He started shaving about 2 years ago, and that's not a knock on him. I'm not knocking this guy. But he has 64,700 subscribers and growing. He's killing it, doing a really good job. So I would ask you to please give a like to the channel. I would really subscribe to the channel, give the video a like, and that way I can grow this channel up somewhat. I'd really appreciate that. Tell a friend, share the video. It helps me out quite a bit when we are doing these. What else are we going to talk about? We'll talk about in the members group session later on. I think I'm going to go about 7 o'clock tonight. We're going to do a live members session. And during that session, I take requests from members to review the stocks that they want me to review on video. It's a free service to members, and please, if you want to join, please join up. 14-day free trial offer. And what else? Oh, I'm going to begin doing best stock charts again. I used to do it. I stopped for a while because I started doing the live streams. I'm going to resume it, and that comes out on Sundays, where I put out our watch list for the week. I do an abbreviated discussion with regard to the charts that we like. And then I'll roll out more of a deep dive for members on Market Wrap or the Week Ahead Commentary, both of which come out on the weekend and on weeknights. So let's begin. First, again, this kid is killing me. 64,000 subscribers. He's been around half as long as I have. He's killing me. You gotta hit that like button, please, and subscribe to the channel. And click that bell button to get notified when I go live. And let's get to the charts. I think we'll do the weekly charts first. And if somebody could let me know how the audio is. This is a brand new microphone. Are you hearing me okay? Is there static? Is there any type of noise that is not good for the ear? Thank you. What I want to do is I want to begin with the yield curve, twos versus tens. And it's a quarterly chart. Let's go to a monthly chart. Okay, so monthly view of the yield curve. And for those not familiar with what the yield curve is it's when you have shorter duration, shorter maturity bonds that are paying higher yields than longer maturity bonds. So you got to have a 2-year treasury bond that's yielding 3%, where you have a 10-year treasury bond that's yielding 2.9%. Why would you go out 10 years when you can get 3% on a 2-year, right? Why tie up your money? You get paid for shorter time frame. So what we have here is what I believe to be a bear flag setup. And I think that we are going to break and go lower here. Now the problem, if you're not familiar with what the yield curve is and what it means really, what does it mean to you as a trader? What it means is that ever since the mid-1950s, the yield curve has been inverted. Each time we have gone into recession except for one time. And that is it. And back here you can see here was the dot-com crash. Back here, the financial crisis. The yield curve inverted. And once it begins to start steepening again, that's when a lot of problems happen. But it appears as though we have had our leg up. Normally, you get a W formation or a double bottom setup. You had it back here. And I think it's going to set up yet again. I don't think that this lower band of support is going to hold. And we will probably break. Weekly chart. Sorry about this. Okay. So the weekly chart is showing that current that we have a steepening of the yield curve on the week. So that weekly view is going counter to what I just talked about on the monthly chart. I think that the monthly chart takes precedence over a weekly chart, and that this is a short-term blip on the yield curve. If I'm wrong and we push higher on the yield curve, that steepening of the yield curve, that's not going to be good for stocks, because typically when you get that, that marks a top for the stock market. So we'll be watching the yield curve. We'll be looking for a breakout, but I think that the Federal Reserve, with their shenanigans, with manipulating the balance sheet, what they will do is they will go in and they will resume their tightening of bond yields, or buying of bonds to reduce yields going out to the 10-year mark, and they'll drop down those bonds. And that'll bring rates down, and that'll keep this economy alive. Now, speaking of the 10-year yield, the weekly chart, you have a nice sloping pullback here. And we are threatening a breakout on the 10-year yield. So if you're wondering why stocks, in addition to the manipulation through the media, why stocks are struggling at current, look no further than the threat of the 10-year yield breaking out to the upside. Now, I was asked by one of our good friends, Tom, to take a look at the quarterly chart and the monthly chart of the 10-year. And we'll do that now. This is the monthly chart. Now, what I'm looking at here on a monthly basis, Tom, if you're out there, what I'm looking at here is a rally off of an extreme oversold condition up and into the upper band of resistance. And this is not a bullish chart to me. When it becomes bullish is when we break out above this upper band of resistance on a monthly basis and we close there. And that, again, will not bode well for the stock market. Now, taking a look at it from a quarterly perspective, here's where things are not so warm and fuzzy for those that are looking for lower yields. We are trading just shy of historical support. We are in a tight trading range. And if it's such time that we ever break out above the 3.24 level on the 10-year yield, you're going to see stocks just crater. So at current, we are flirting with the lows. We can go lower, but at current, on a quarterly basis, we have, the better part of a month to go in this quarter. And we are threatening to move up higher here. So that does not bode well for bonds in particular. And we'll talk more about the bond market. It is not looking good at current on a weekly basis. So to Tom's question, he emailed me about this earlier. What do I think about the quarterly chart? I think it's ominous. I think that we could be probing a bottom here. And were we to launch higher and break out, that would spell all sorts of trouble for the bond market. Now, going back to that monthly chart, I don't think that the Federal Reserve is going to allow the yields the 10-year yield to break out and above this upper band of resistance. Because remember what happens. The government, when yields rise, they have to pay more money on the debt that they've accumulated. They don't have the money. They need the Federal Reserve to print the money to repay that debt. And if yields were ever to normalize, which they can't do, the payments alone on the interest, forget about principal, the payments alone for the interest on an annual basis would be equal to the defense budget, roughly about $650 billion per year. So they cannot allow it to happen. Hey, Patrick, welcome aboard. So the 10-year right now is flirting with a breakout. The quarterly chart is looking ominous. Weekly chart, going back to that for a moment. We're up on the week. We're threatening a breakout. Anything could happen here. I would prefer to see for our positions to do well, I would rather see a break of yields and to have them move lower. When we're positioned long of silver and gold primarily. Those are our big concentrated positions and growing. Now, when doesn't it matter when yields rally along with gold? When it doesn't matter is when you have inflation, and the federal government will not admit that at current. So I wouldn't expect that anytime soon. I would be very, very worried about this market, this economy, if you see bonds and the dollar drop at the same time. That has been happening this week. That is a sign that the global economy or the global community is losing confidence in the United States. 1 week does not make a trend. So we'll talk about the dollar. We'll talk about this is the TLT, the 20-year bond price, not the yield, but the price. And you could see that so far this week, we are down on the week. We were higher. We have reversed to close, or not close. We are poised to close lower on the week. Not a good sign. Now, when you take a look at the US dollar, here's the dollar on a weekly basis. We're at the lows of the week. So this is not a good sign to have both your bond market moving lower and your currency moving lower. Again, that means that you're not seeing money flows into the US, into our currency, into our bond market. It's leaving at current, but this is only 1 week. So we don't want to raise a panic here. All right, it's just an observation. Put it in the back of our heads and remember it because it will impact the way we trade. These observations are critical. Moving on. The tips. Now, earlier I mentioned that you could see yields rise along with gold if you saw inflation, but the government won't admit it. And why won't they admit it? It's because they have to explain why, if you have inflation, it's the Federal Reserve's mandate to fight inflation, then why are they cutting rates? Why aren't they fighting inflation? But they can't do that because what happens? That means the federal government can't spend as much. Why? It's because the money that they do have, if any, they have to repay on the debt because their interest payments go higher. What does the Federal Reserve need to do then? Print more money. This is the sickness that we are involved with right now. It's really not going to end well. So I hope everybody's positioned wisely for what's about to happen. Now, this could happen 6 months from now, a year from now, 2 years from now, but it's setting up. Now, going back to inflation, this chart is telling us, it's telling us that we have inflation. The markets are telling us. This is a chart of the tips. These are bonds issued by the government. Let's go out to a monthly view. And we'll come back down to the weekly view. Overlaid here in gold is the price of gold. You could see that both trade in tandem. When gold peaked out, so did the tip rally. And we drop it down into a long consolidation, a multi-year consolidation. What are we doing at current? We are breaking out to new all-time highs on the tips. So What are the tips telling you? They're telling you there is inflation out there, but nobody's listening. Gold is beginning to play catch up. It's been consolidating some. It's up on the year, but it's got a long way to go. And I want to show you a chart right now as to why, in the very short term, we're very, very bullish on gold going out through January. Oh, and for those just joining in, I already went over this. Look at this kid, Zip Trader, young kid, nice kid, does a good job, great videos. He's got 64,000 subscribers. I have less than 2. Could somebody please subscribe to my channel? I'd appreciate it. If you haven't already done so, give the video a like. It's killing me, this kid. That's not a knock on him. He does a nice job. All right, let's go through the chart I wanted to talk about. This is a seasonality chart for gold. And this is December here, and here is January. Over the past 6 years, gold has been higher 67% of the time in the month of December. In January, for the past 6 years, it has been up 100% of the times. So these are the two best back-to-back months to be long of gold over the past 6 years. So now is the time to dip our toes in the water to add more. If we get a breakout on the gold miners, I'll buy the gold miners. If we get an opportunity, we already have a very large position in the gold miners. We'll also be taking a look at silver. Let's check out the seasonality for silver. December, not so great. But January, 100% of the times over the past 6 years, silver has been up. So we like gold and silver moving into the new year. Let's go back to the weekly charts. I'm going really long here, and I'm going to blow through the rest of these. VIX weekly basis. 40,000. How you doing, buddy? So you're not buying their contention that, let me put my glasses on here, that there is no limit to what we can do? No, because that argument's been made for millennia. You're be talking about central banks printing money? Yeah, that'll all come to an end. Everybody thinks that it's different this time, and every time I hear that, I get really, really nervous. So at some point in time, you're going to see the markets fighting back, and you could argue that the markets already are fighting back. Let's go back to the 10-year yield for a moment, and we'll just talk about this chart at current. But before we do that, I want to bring this up. This is the Fed zone data. This is the Federal Reserve's balance sheet. We'll take a 10-year. Let's go to a max view. Here's the max view. Rose since 2008, ever expanding. Here is since September. They're goosing up their balance sheet yet again. 1-year chart. Here it is. We are currently now sitting comfortably above $4 trillion. They continue to expand their balance sheet. But what is the bond market doing? The bond market there we go. Let's go to a monthly view. The bond market is fighting back. It's rallying. So with the Federal Reserve in there, granted, they say they're buying very, very short-term Treasury notes, but the bond market is struggling to find fair value. So to keep this game going longer, they're going to need to be far more aggressive in their bond buying. They're going to need to go out and buy the 10-year, the 30-year bond. They're going to need to buy the entire goddamn spectrum of the bond market. So we haven't seen anything yet. 2019 was an eye-opener. Who would have thought, although we've been saying it, who would have thought we would have been back into QE4 or not QE this year? when they were talking about this time last year about the Fed's balance sheet being on autopilot, meaning they're running off bonds off their balance sheet and raising rates. Look at what has happened. Hey, Arthur, good to see you, man. Arthur, a long-term friend. Welcome aboard. Patrick had a lot of nice things to say about you, Arthur. You guys go way back. It was great to meet him. Oh, and Patrick's son too. That's right. Cool. So going back to, is it different this time? It's not different this time. It's in the best interest of the global community to keep this game going. But at some point in time, there will be an event, whether it be a bank going down, whatever it may be. We're not going to know it until it's too late. And they're going to lose control. And we're going to be in a world of hurt. And it's going to be sad. But the key is that you need to be positioned properly and to take advantage of the unfortunate calamity that's about to hit us. And again, I'm not saying it's going to happen tomorrow. I'm not even saying it's going to happen in 2020. I'm not that smart. I don't know what's around the corner. All I can take a look at is the charts and say something is unsustainable and something has to give fairly soon. And for this rally in the 10-year yield to cease to continue higher, they are going to need to go in and start buying longer dated maturities. And if they were really fighting for inflation, they're going to get inflation. And you could argue, looking at the tip market, why are the tips ripping through the ceiling? Why are we at all-time highs on the tips? I don't make this up. There are institutional players out there that are buying up tips. Why? If there's no inflation. Doesn't make sense. And don't forget, the CPI is, when Jimmy Carter was president and you had inflation running amok, the way they calculated the CPI was completely different than what it is now. So you can't draw an apples to apples comparison between CPI 1979 and CPI 2019. It's completely different. All right, so the dollar rolling over, lows of the week. It appears as though we are probably going to close there. Not looking good. The VIX, we were higher on the week. There's still a chance that we could recapture the support level. If we close above 1475, 1470 on the VIX, that is not going to bode well for the markets in the coming weeks, because that'll probably be the stage where you get a higher low set up for a rally in the VIX, a sell-off in the markets. The Dow Transport. This is why we look at the weekly charts. You can take a look at a daily chart, and you can say, wow, the transports bounced back today. They closed up and get all excited. Not here. That's not what we do. We want to step back. What's the big picture? And the big picture is not looking good. Unless we get a big rally in the transports tomorrow, we will have a breakout point failure on the Dow Transports, meaning we broke out here on the week of the 21st, and we have now broken down. So longs had better hope for a major rally tomorrow, 1 day left in the Dow Transports. And remember, the Dow Transports have not broken out along with the Dow Jones and the S&P 500. What gives there? Okay. Moving on. The Dow Jones Industrial Average. Outside reversal week so far. We're off the lows of the week. That's all fine and dandy. However, we have fully engulfed the open and close of last week's price action. And if we update RSI here, at current, we have a breakout point failure or a bull trap on RSI. We broke out here the week of November the 4th. At current, we are trading down below that level. Down volume is light this week. Very light relative to the moving average in red here. The Russell 2000, of which we currently have a small short position in. Now, you could argue, and I would buy into that argument, that we have broken out, which is a fact, and we are pulling back and doing a retest of the breakout point. Fair point. That may be the case, and I may need to cover that position. The good old Carter days, when CD paid, right? And they gave you a toaster. Yeah. Amazon? Okay, we'll take a look at that. Okay. All right, so IWM, watch for a close above support. A close above 160 would have us thinking about moving to the sidelines on a short position. And I'll talk to members more about the daily chart because I have concerns here. All right, S&P 500. I know this is a little bit difficult to view. In fact, let's do this. Let's drill down here to a 6-year view. All right, that should be better. I want to point out that ever since January of 2018, we have been in a megaphone formation. And we broke out here the week of October the 28th. On, of course, news that we're going to have a trade deal. And, of course, Larry Kudlow with short strokes away. What happened to those short strokes? What happened to that deal? I digress. Anyway, we have broken out and above this upper band of resistance here. If we ever fail to hold this support level on a pullback, this market has a lot of problems. So we shot up higher last week. I know it's difficult to see, but you're going to have to take my word. We closed off the highs of the week, flashing. As a matter of fact, I could drill down here. That should be better. You can see the topping tail on yesterday's price action, last week's price action. And this week, no new weekly high. And it's the first thing I look for on a Monday, Tuesday. I'm always looking for new weekly highs. And, of course, we don't have that this week. Much as what we saw in the Dow Jones, we have an engulfing week. Clovis. I've traded that. I know you made money on that one recently, right? You mentioned that, Arthur? So the S&P 500 is in a precarious state. It's very extended here. Down volume this week is still very low. Note the MACD histogram. The histogram is losing momentum. Long story short. The banks another bearish engulfing week. And this despite the fact that yields are higher, no less. Emerging markets looking good. However, 20% of the EDC is in China. That's why we won't buy it. We're looking at the BRZU. That's Brazil. Energy, weekly chart. You know, you take a look at a daily chart. I wouldn't touch it with a 10-foot pole. But you take a look at it from a weekly perspective. If we rally tomorrow and we close back above this upper band of resistance, that'll be a very bullish event for the XLE. Now, if we fail to rally back tomorrow, which the daily chart does not appear as though it wants to do, looks like it's fighting it, we could have a problem in the energy sector. And watch for a break below this lower band of support at 58.72 on the XLE. If that breaks, it's a major problem for the energy sector, for oil, nat gas, anything energy related. And the fact that we have the transport's not breaking out, what do you need so much energy for? If you don't have transportation that's in demand. Hey, Jerry. Good to see you. Welcome back. Arthur Kudlow on CNBC 9:30 a.m. We'll try and... Oh, he's coming on tomorrow morning? If he ever resigns, you're going to see gold rip and the dollar drop. Oil. Now, oil did very well this week so far. We're looking for a breakout here. We have already broken out on RSI. Gold, threatening a breakout here. We have broken out about above one level here, horizontally at 1477.62. We need a close above, let's call it, what's the high of the week? Let's call it 1486 would be a breakout on gold. This is a beautiful, beautiful setup. You take a look at the price of gold and you take a look at the S&P 500. Which would you rather be accumulating a position in right now? The S&P 500, which is extremely extended, or gold, which is coiled like a spring? Nugget, we'll talk about Nugget on in the members session. Well, I'm going to send out a link at 7 p.m. Eastern Standard Time tonight. We'll do a members private group session. Silver, struggling this week. Had a good day today, though. We'll talk about that in the members group session. Oh, and by the way, for those that are just joining now, there's a link below in the description area. I'm going to be, if you're not on our email list, if you're a member or you're already on our email list, don't opt in. You don't need to, you'll get it. But on Saturday or Sunday, I'll be sending out best stock charts for the coming week. I was doing that for a number of years. I stopped because of the live streams. I'm going to restart that now. And I lost a bunch of people on an email list. So if you didn't get an email this evening that I was going live, that means that you got deleted off my email list. To opt back in, just go click that link down below and just re-enter your name and you'll be back on the email list. We'll talk about want in the members area. LABU, same. Yang. Yang puts you short of China. I've been watching it all week. I love the daily setup. We are breaking out at current on a weekly basis. I don't like the fact that we are off the highs of the week, but the daily chart is setting up really pretty. I have to say that, but we'll talk about that in the members private group session tonight about a possible long trade. BRZU, I mentioned I don't want to buy emerging market funds. There's a reason for it. The Chinese have been pushing companies like MSCI to push Chinese stocks, Chinese mainland stocks, into those funds. And there's no transparency with these companies. So I don't want to invest in anything that has mainland China companies. So I would rather buy individual country funds like BRZU or Mexico, Vietnam. I haven't looked at those charts in a couple of days, so I don't know how they look. But the BRZU on a weekly basis is breaking out, has broken out. Take a look at our Stokes hooking up, RSI hooking up. We'll see how we close out the week. And we'll talk about a strategy for entering the position on the members private group session tonight. Santiago, hey, how you doing, buddy? Larry Kudlow is the fairy godfather of supply side economics. He wears rubies. Guys are ruthless. Santiago, Bob, would it be that the reason there is not sky high inflation is because money today is digital, not like in the 1970s? I think that it's a good question. I think that there's um, a lot more manipulation of the data that the government puts out. It's very very self-serving. I mentioned this earlier. Maybe you joined a little bit later, but the CPI of the 1970s is not the CPI of today. Uh, there's something that I like to call shrinkflation. Probably everybody's seen it. You don't need to be a genius and go to the supermarket and see that your pound of coffee is no longer a pound. The price incrementally moves up and the size gets smaller, right? That's real inflation. That is out there. Uh, the I think that you have a certain amount of deflation in the economy due to the ability to comparison shop on the internet. That I won't deny. I think that the internet has been a huge boon for the consumer. So I think that that's a part of it. That's why it is not necessarily real right now, inflation really impacting people's pocketbooks as much as it was in the 1970s. Also, we produce a lot of our own fuel now. In the 1970s, we were completely addicted to OPEC. It's not the case anymore. So if OPEC still had a stranglehold over our markets, oil would probably be a lot higher than it is right now. So I don't think that I think that the environment has changed somewhat for the consumer. At some point in time, if yields were allowed to normalize, the ability of the consumer to refinance would be it wouldn't exist. People just don't have the earning power that they did back in the 1970s. So I don't believe that it's different this time. I think that I think that we have certain influences on the market that are soon going to be running out of their benefits. Meaning, how much longer are we going to get receive benefits, reduced prices due to the internet? I don't know. I don't know how much more price discovery there could be on the internet. Maybe there is more. Maybe this will last another year. But at some point in time, you're going to see input costs on producers rise. And frankly, the Chinese aren't, and don't forget, we didn't have China back in the 1970s as well, producing cheap goods. And what we're doing right now is we are self-inflicting price increases on ourselves vis-a-vis tariffs. Now, at current, the Chinese have been eating a lot of those tariffs. And we haven't seen the price hikes that we normally would. But if the Chinese ever were to allow market prices to normalize, or if companies left China, went over to Vietnam, they're not as cheap a producer as is China, and prices would rise. So I think that we're at an inflection point right now where the benefit of the internet is beginning to run out. You notice how you're getting charged a lot more sales tax now when you buy something on the internet? So it's beginning to run out. It's losing its steam. China is most certainly lost its steam. And I think that we are at the very end of the rope of efficiencies that the internet has been able to deliver. And things are going to get real fast in the coming couple of years. So I hope I answered that question. Hey, Dylan, welcome. All right, let's move on here. What time do I have? It is 6:38. I have a couple of minutes. I could do, let's do Amazon. Arthur, what do you prefer, Amazon or GBTC? Be well, Jerry. Thanks for joining in. Let's bring up Amazon. We'll do both. Whew. Amazon's not looking good here at all. All right, so Amazon is setting up very, very poorly. In that we attempted to break out last week. We were rejected. We attempted again this week. What do we have? An outside reversal week. Now again, one trading day left to go. We could bounce back for all we know. Daily chart. First thing that jumps out at me, we have RSI and Stokes declining and down below the 50 mark. Rallies tend to fade. You saw that yesterday. Today, we just moved lower. Volume is subdued, but this is not a stock I would want to buy at all. And Bezos now has a fight with Trump, President Trump regarding their server business, the hosting. What is it? Cloud business, cloud storage business. So I wouldn't be a buyer of Amazon. I would avoid these shares like the plague. All right, let's bring last one, GBTC, and then members. If I'm not going over your symbols right now, just join me in the members private group session, and we'll go over it there. I would avoid. I think I had this one annotated. Nope, I don't. So, what was it, GBTC? So we have a new weekly low right off the bat that just makes me negative on it. Stokes continue to weaken here, as does RSI weekly basis. So the weekly chart is not looking good whatsoever. The only thing I could say positive is the fact that we have very, very light down volume. And that tells me we can get a snapback rally fairly quickly, even in one day. Daily chart. Yeah, so you may get a pop here. We may be seeing a higher low in RSI and on Stokes form. And here's the play, right? You could, if you were looking to open up a long position, you could buy right where we closed today with a stop right below the day's lows at 8.66. Then add more on a breakout above, let's call it 9.20 per share, thereabouts, above this upper band of resistance. And that would be a good way to scale into that trade. But I would keep a tight stop here. Don't forget you have your moving averages going in the absolute wrong direction. So that's a concern. You did see a filled candlestick today. That's at the bottom of a trading range. It's a sign of indecision. No new daily low. So you may get a pop here. But I'm not loving the setup longer term. And with that, folks, you're welcome, Arthur. Anytime. With that, folks, I want to ask you again, please remember this kid. This is my tale of woe. My tale of woe tonight. I had this kid who haunts me. And if you don't think that this is bad, this kid here, again, a really good kid. I'm not knocking him. He's doing great jobs. This kid here, look at his smile arms. SOB. No wrinkles. Good looking kid. 654,000 subscribers. I have less than 2. So if you're not currently subscribed, can you please subscribe to my channel? I would appreciate it. This is really humiliating. And if you could please like the video, share with a friend. And everybody have a great night. Members, expect a link to the private members group session in your email within the next 10 minutes or so, and I'll see you at 7 p.m. Eastern Standard Time. Everybody have a great night and a profitable trading week. Be well.